I find it relatively amusing that it seems like it's been kind of a boring week for Bitcoin when, in all reality, there's actually been quite a lot going on. I mean, if you think about it, just over a year ago, Bitcoin had never been above $20,000. Just a few months ago, it rallied to its all-time high of $69,000. We just had the world's largest Bitcoin conference ever in Miami a week ago or so, and yet here we are. Many of us feeling like we're stuck in a form of malaise while Bitcoin hovers around $41,000. This podcast is for information and entertainment purposes only. Nothing on this podcast should be construed as financial advice. All views expressed on this podcast are solely the opinions of the host and/or any guests that we might have from time to time. Nothing on this podcast should be construed as a specific inducement to make a particular investment or to follow a particular investing strategy. Hello, you sexy sat stackers, and welcome to the latest edition of the Bitcoin Bulletin Podcast. Today is Wednesday, April 20th, 2022, and that means it's DCA Wednesday. Many of you in Bitcoin land are also entertained by the fact that it is 420, which is, among other things, Elon Musk's favorite number. But the most important thing about today's date is that Wednesday is the day we add to our stack. Before we get into the whole dollar cost averaging thing, though, a quick look at the vital statistics. We're currently sitting at a blockchain block height of 732,780. Bitcoin is currently $41,550 or 2,407 sats per cuckbuck. That is just a little bit higher than it was when we began our last episode. And ironically enough, last episode you could get 2,420 sats per dollar. So here we are on 420, but today it's 2,407 sats per cuckbuck. I'm refraining from calling that 2407 Moscow time anymore, because as funny as that was, it's just not so funny anymore. If everyone's favorite golem of the shiny yellow metal troll wanted to cash in his rocks for Bitcoin, it would cost the shift head 21.2 ounces of gold to buy just one Bitcoin. That's a little more expensive for him today than it would have been last week, when 20.9 of his little yellow coins would have bought 1 ounce of Bitcoin. One Bitcoin today will score you 2,491 Papa John's pizzas. That's a few more pizzas than last week, when it would have scored you 2,476 Papa John's pizzas. And 1 barrel of oil will cost you 287,789 sats. It has now been 161 days since Bitcoin's all-time high of $69,000, and that means we're down about 39.8%. Like I said in the intro, that's not too shabby considering Christmas of 2020, was it, that we broke our old previous all-time high of just under 20,000 for the first time. That was an interesting ride, because we hit 25,000 on the 25th, 26,000 on the 26th, 27,000 on the 27th. So exciting times, definitely, in comparison to the sideways that we seem to have been going recently. However, Bitcoin is worth more than double what it was then. So despite the fact that many of you out there appear to be bored, Bitcoin is doing quite well. One of the things you hear quite often, I remember one of the things distinctly during the 2017 bull run, a lot of the OG Bitcoiners, a lot of the core developers were complaining about the bull run, saying they actually prefer the bear markets because it's quiet, there's not as much hype, there's not as much attention on Bitcoin, and there is certainly attention raining down on Bitcoin right now. But that during those quiet times, they can get a lot more accomplished. It isn't quite as quiet as it was during the crypto winter, that is for sure, but it does look like the devs are doing some exciting things out there nonetheless. But back to those vital stats. Where was I? We are currently sitting at a market cap of $790.5 billion. That is $5 billion more than last week. And of course, some of that is up to Some of that is not just because Bitcoin's worth a tiny bit more than it was last Wednesday, but because there are more Bitcoin in existence. And obviously, market cap is the valuation of all Bitcoin in circulation at the current market price. So market cap will continue to go up even if the price would remain the same until that very last Bitcoin is mined. The mempool is relatively wide open. It looks like there's only 593 transactions in my mempool pending. That obviously will clear in less than one block. So while it's estimating that it'll take 4 sats per byte to guarantee that you'll be in the next block, 1 sat per byte transactions will certainly clear relatively quickly. Last week it was recommended minimum of 10 sats per byte to be in the next block, and 2 weeks ago it was 11 sats. So the on-chain activity has trended down a little bit. However, as you know, my favorite metric is the 24-hour transaction rate, and that is in fact up from last week. Last week we were averaging 3.21 transactions per second on-chain, and this week we're up to 3.37 transactions per second. And that is indicative of really healthy on-chain transaction volume. So perhaps the reason that it is cheaper to get your blocks recorded on the blockchain right now, your transactions recorded on the blockchain right now, is not because of a decrease in activity, but because blocks are coming in a little bit faster than they should. And indeed, that's the case, because currently blocks are averaging 9 minutes and 52 seconds this difficulty epoch. Last week it was averaging 10 minutes and 7 seconds. Last Wednesday we were just a mere hours away from the next difficulty adjustment. I think we were 59 blocks shy of a difficulty adjustment, and that ended up being a downward difficulty adjustment of 1.3%. So it got 1.3% for you home miners out there to make a little bit more Bitcoin with your Ant miners or your What's miners. And as a result, though, it looks like they overshot that a tiny bit because blocks are coming in about 8 seconds too fast. And we are about 7 days away from the next difficulty adjustment, so right in the middle. So it's kind of hard to tell what's going to happen between now and then because, again, that is based on the average of the difficulty epoch, and we're only halfway there. So things tend to look more extreme early on and then smooth out towards the end. But at the moment, depending on where you get your data, we're looking at a difficulty adjustment of anywhere, an upward adjustment of anywhere between 0.43 to 1.3% increase, which ironically would erase the difficulty adjustment decrease that we just had. So the blockchain is actually relatively steady, but it's humming along. We're averaging 3.37 transactions per second, and you know that I like to see that number because really I like to see it above 3 transactions per second. When it hits pi 3.14, that makes me happy. Anything above that makes me really happy. 3.37 is that's getting close to the maximum number of transactions per second that the blockchain can handle. So that's pretty healthy on-chain activity. All right, back for the real reason we're here, and that is to get our DCA stack on. If you are not familiar with what DCA is short for dollar cost averaging, and dollar cost averaging is, quote, an investment strategy where you invest your money in equal portions at regular intervals regardless of price. If you've been following us, you know that we chose $20 and we chose Wednesdays. Whatever strategy you choose is up to you. As they say, do your own research. Never invest any money you can't afford to lose. Certainly don't invest any money you're going to need tomorrow. Bitcoin is a long-term play. You should not be planning on getting rich quick. You should be not planning on selling your Bitcoin for a minimum of 4 years, at least one halving cycle, if the halving cycles continue to play out as they have throughout Bitcoin's entire existence thus far. You know, all the news stories that came out 4 years ago were that if you'd invested X number of dollars, usually it was something in the name like if you'd only put in $100 10 years ago, you'd be incredibly wealthy now. Bitcoin has continued to go up tremendously year over year on average. If it continues to do that, again, this is a long-term play. Imagine where it could be 10 years from now. I mean, that's more than 2 more halving cycles out. So if Bitcoin continues to do what it's done in the past, then I mean, who who knows? But it's almost inconceivable to think of where Bitcoin could be. And I'm a firm believer that it's either going to go to zero or it's going to go to the moon. It's kind of an all or nothing proposition for me. Either Bitcoin's going to live its full potential. If it does, if we get hyper Bitcoinization, or if it just becomes a global reserve currency or a global standard, or even just gold 2.0, then there is a lot of room for growth still in Bitcoin price. Again, that is not why most of us are here. Most of us are here for the financial sovereignty. And that is why we don't plan on ever selling our Bitcoin. But if you are, just be advised that owning Bitcoin over the long term has always been a safe bet throughout Bitcoin's entire history. Again, past performance is no guarantee of future results. But I, for one, believe that there's one of two alternatives for Bitcoin. It goes to zero or it goes to the moon. So do your own research. If you choose to invest, pick an investment strategy that you feel comfortable with. Some people dollar cost average every paycheck, whether that be weekly or biweekly, some monthly, some yearly. That's not exactly a great dollar cost averaging strategy in my humble opinion, but some even DCA as often as hourly, and there are services that will automate that for you, and that seems kind of excessive to me. So for me, for this test, we chose weekly. And we chose $20. And again, we chose $20 because for most of you listening, $20 is not an amount of money that is out of reach, or that would be unreasonable for you to put away as a long-term investment. But for other people in other parts of the world, other than where I'm sitting right here, fortunately, and well, heck, even for some people right here, $20 is a lot of money. So you do you. But what is important is that you pick a fixed amount of money and a regular interval, and you keep it with it. We've been doing this since July 28th. This is our 39th. This will be our 39th stack. And in just 38 weeks, we've taken $20 and invested a total of $760. And all of a sudden, that's starting to look like real money. But, we're no Michael Saylor, we're no Elon Musk, and we're definitely not even a minnow at $760. So you do you. Invest what you feel comfortable putting away every week. This is really just a test so we can see whether dollar cost averaging works out. And in less than a year, obviously, that is way too short of a time frame to have made any conclusions or drawn any conclusions about where we're at. So that's where the keep it up at regular intervals, regardless of price, comes in handy. Along those notes, you might have noticed this is it's at least the second week in a row where, had we done our DCA stack on Monday or Tuesday, we would have bought a lot more sats for our $20. Bitcoin was down to like 38,500 or something just the other day. And it can be really tempting to try and shift your purchases around, to try and time the market. And that is where a lot of people, both in stocks and Bitcoin or whatever you're trading, get absolutely wrecked, because as they say, the market can stay irrational longer than you can stay solvent. DCA, the whole point of DCA is to mitigate that. So sure, if we had bought on Tuesday or Monday, we might have gotten a little more Bitcoin than we're going to stack today. But in the long term, the idea is our cost is going to average out and we'll be ahead in the long term. So while it might be tempting to try and time the market on weeks like this, that I think if you look back through our purchase history, this is just there have been times when Wednesdays worked out to be the cheapest day of the week to buy, and there's been times when Wednesday hasn't been the cheapest day of the week to buy. So the idea of DCA is to stop trying to time the markets. And probably the best way to DCA is to use a service that lets you auto buy. Cash App, where we invest, is one of those. But as you know, I'm a glutton for punishment, so I like to physically make my Bitcoin purchase every Wednesday. And part of the reason is because I'm doing a darn podcast on it. So, I might as well purchase it while we're doing it live and go through this together and in person. So we're going to do that. We're going to open up the handy dandy Cash App. If you do not have the Cash App, I think it's the easiest way to stack sats, especially in small amounts like $20. Cash App isn't necessarily available everywhere in the world, but if Cash App is available to you and you don't have it already, There is a referral code in the show notes, and if you click on that, I think you'll get $5 just for signing up, and we'll get $5 for using our referral code, and that'll help us both out, and that would be really cool because we do appreciate your support. But pick an app that or a platform that you feel comfortable with. Pick a dollar amount you feel comfortable with. Pick an interval you feel comfortable with, and get stacking those sats. So we're going to open Cash App, and as usual, I don't keep any money on Cash App. And part of the reason I love it so much is I have a debit card linked to my Cash App. So all I have to do is hit add money, add $20. And unlike a lot of other services, that $20 is available to invest immediately, and it's available to withdraw that Bitcoin immediately once we purchase it. So that is a benefit you won't find on every trading platform that you will find on Cash App. Then you tap the little Bitcoin logo in the bottom right-hand corner, tap buy. We're going to enter $20. Click next. It's going to ask us to confirm, and voila! Just like that, we have purchased an extra 47,112 sats at a price of $41,496.86, and that has dropped our average cost basis even lower, which is cool. Last week, our average cost basis was $47,580.77. This purchase has knocked another $146, almost $147 off of our average cost basis. So now our average cost basis is $47,433.83. That is basically what that means is that while we've invested $780 in Bitcoin now, we've done so at a variety of prices. I mean, we've invested as inexpensively as, well, what was our cheapest purchase? Our cheapest purchase was our cheapest purchase was $36,472.50 on January 26th. And our most expensive purchase was almost darn near the top back on October 20th when we bought at $65,969.29. Again, through the beauty of dollar cost averaging, though, our average purchase cost has worked out to $47,433.83, which is in the hole right now. But again, we started this little experiment during a halving bull run, which probably isn't the best time to have started investing in Bitcoin. But as they say, their best time to have purchased Bitcoin was 10 years ago, but the second best time is right now. And again, this is a long-term play. We're not trying to trade here. We're not gambling with our money. We're not trying to pull the lever and get rich quick and win that jackpot overnight. What we are trying to do is build some intergenerational wealth. If Bitcoin does go to the moon, let's say Bitcoin hits that mythical $1 million mark, that means our stack of 1,644,396 sats would be worth $16,443.96, and that unquestionably will have been the best return you could have made on that money. Bitcoin has consistently been the best performing asset, period, of all time. And obviously there are peaks and valleys, highs and lows. The people that bought it $17,000 in 2017 felt really burnt for a couple of years, but they're not feeling too bad right now. And if you bought it $69,000, similarly, you are probably feeling a little upside down, unless you are unless you're an OG, in which case it's just another day stacking sats. But we are less than 2 years away from the next halving. There'll be a halving approximately this time 2 years from now in 2024. And if history repeats itself, that means that 6 to 18 months later, we should be seeing another record all-time high. Bitcoin going on that next leg of the 4-year halving bull run. However, again, as they say, past results are no guarantee of future returns. But so far, that has been the way Bitcoin has played out. And even if it isn't, the alternative seems to be that, well, the two alternatives. One, it goes to zero, or maybe we've seen the end of the super cycle or the end of the Bitcoin halving cycle, and we end up in, quote, super cycle, where it just goes up into the right. forever. Obviously, the more gradually it goes up, the less hard it's going to crash back down. In the past, Bitcoin has tended to go on these just absolute tears and then crash by 50 to 80%. We are definitely looking like we were in the 2018 timeframe where Bitcoin had hit 20 and then it languished around 10 for a while, dipping as low as 3 and then back up into the teens, and then basically 8 to 10 for about a 2-year period before it just went on that absolute tear when we set the new all-time high again. All right. Well, I wanted to keep this one short and sweet because while there is a lot going on out there, I don't think a whole lot of it's worth really talking about. There was a lot of scuttlebutt about Janet Yellen giving a speech where she, quote unquote, beautifully described Bitcoin. Of course she did. You know, she has speechwriters that absolutely know what they're talking about. As I said a couple of episodes ago, she is an enemy of Bitcoin. Do not forget that she was burned and burned hard and burned publicly by Bitcoin sign guy. And that is a grudge I don't think she will ever forget. I personally think when your enemies understand you, that is when they are the most dangerous. So to me, Janet Yellen's speech where she flawlessly, quote unquote, outlined a description of what Bitcoin is and what Bitcoin's potential is. If they get it, you know, I'd rather have an ignorant enemy than an enemy who knows all of my plays. So I'm not super excited about that. I am super excited to wait and see how the Strike thing works out with Strike and NCR integrating Lightning into all these POS systems. It is interesting to see the CoinDesk logos and all the advertising going on. I got the NBA playoffs featuring Bitcoin logos. Someone rightly pointed out on Reddit just yesterday or today that, man, had that happened a few years ago, that would have caused a tremendous bull run in and of itself. And today it just seems rather ho-hum. And that gets back to that whole malaise thing that I was talking about. And that's a unique feature to Bitcoin. Only in Bitcoin would $41,000 seem boring. I mean, that really is amusing to think about because, I mean, like I said, if it were anything else, you'd look back and say, hey, 2 years ago, it wasn't even worth half of that. So that's just pretty amazing. But here we are sitting at $41,496.86, and a lot of us are feeling bored about that. Well, the only thing that matters to me and the only thing that should matter to you is that we're going to end today with a few more thousand sats than we started with. And hopefully you're following along. If you're not following along, hopefully at least you're getting some entertainment value out of this, because we are going to keep stacking sats until Bitcoin either goes to the moon, it goes to zero, or you just get bored and stop listening. Until then, keep stacking those sats, you sexy sat stackers.